Alarm bells about rampant inflation and unprecedented money printing, the most notable investors of our generation screaming that we are in a bubble. Are we about to see the biggest crash we have ever seen in world history across every asset class? Stock markets, Bitcoin, cryptocurrency, and gold all wiping out trillions of dollars of value, orders of magnitude larger than the 2008 financial crisis or the dot-com bubble of early 2000. Famed investor Michael Burry, famous for correctly predicting and making his fortune off the 2008 crash, has again begun sounding alarm bells that we are about to witness the mother of all crashes in the midst of the greatest speculative bubble of all time. Not only is he sounding off the alarm bells about an upcoming crash, Burry has also put his money where his mouth is and is making his largest bet yet on not only a stock market crash but against out of control inflation. And judging by inflation numbers that came out yesterday and exceeded expectations, it looks like he's right once again. So what is going on here? Why does Michael Burry think we are headed for Armageddon, and what should investors do? Is any asset class safe? In this video, we will analyze what Burry thinks is going on, how he has personally positioned his own investment portfolio to profit from a crash, and finally, what other investors such as Ray Dalio and Cathie Wood have to say about it. Also, before we jump into the video, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing and dropping a like. It's free and you can always change your mind. Before we jump into what Michael Burry is currently holding in his investment portfolio and why he thinks we are heading towards the mother of all crashes, we first need to talk about Triffin's dilemma. And strap yourself in because this gets a little technical. Triffin's dilemma is a fundamental economic problem exposed by profound economist Robert Griffin in 1960. In a nutshell, it goes like this. Because the US dollar is the reserve currency of the world, if the United States, for whatever reason, stopped or slowed down their money printing, the resulting shortage of liquidity would plunge the world economy into a Great Depression, leading to an unstable, contractionary spiral. It's a paradox no one has the answer to. The US is stuck between a rock and a hard place. Keep the money printers printing money and continue to devalue and debase their currency, or pump the brakes, pulling liquidity and ultimately leading the global economy into a Great Depression. In a set of now deleted tweets, Michael Burry set the foundation of his crash hypothesis, likening Triffin's dilemma to the Flying Dutchman. Triffin's dilemma: consider this as China's GDP passes the US this decade, and US debt forces the debasement of the dollar faster than others. Much like the Flying Dutchman, the global fiat system must have a captain no matter how heartless the transition. So Michael Burry is convinced that the US Federal Reserve is left with no option but to continue to print money and debase their own currency. Eventually, he believes China's yuan will take over as the reserve currency of the world, but until then, the unprecedented stimulus is going to explode inflation and continue pumping up the equities bubble. This all sets the stage of why Burry thinks we are in the greatest speculative bubble of all time. But what about Bitcoin, I hear you asking? Why does Burry think Bitcoin is going to crash alongside equities? Isn't Bitcoin meant to be an inflationary hedge against the traditional financial system? Does Bitcoin solve Triffin's dilemma? Not according to Burry. Burry cleared the air, saying Bitcoin does not solve Triffin's dilemma as a global fiat economy is relative and requires liquidity on the scale of the largest economies in the world. This is why Switzerland cannot be a reserve currency. The heart of the fiat system goes to the next GDP champion, #Flying Dutchman. Burry has made it clear that he believes the heart of the fiat system is going to be the next GDP champion, which, as we covered, he thinks will be China. And he's got a point. Currently, Bitcoin does not have the liquidity to be the global reserve currency. Burry continued by saying, Bitcoin is a speculative bubble that poses more risk than opportunity, despite most of the proponents being correct in their arguments for why it is relevant at this point in history. If you do not know how much leverage is involved in the run-up, you may not know enough to own it. So Burry is making the point that because of the amount of leverage used in crypto and Bitcoin markets, if we do see the mother of all crashes in equity and bond markets, Bitcoin will not be immune and will wipe out with them. So now you can see the reasoning behind Michael Burry's crash hypothesis. He followed up by saying, "People say I didn't warn last time. I did, but no one listened, so I warned this time and still no one listens. But I will have proof I warned." And clear as day, this is that warning. All hype/speculation is doing is drawing in retail before the mother of all crashes. FOMO parabolas don't resolve sideways. When crypto falls from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed. Those saying me and Munger and Singer are so out of touch are not considering that we have seen this all before and not just once. And indeed, Burry and Munger have seen this before, most recently back in 2008 and then back in 2000 in the dot-com bubble. Now, before we jump into how Michael Burry is positioning his investment portfolio against a crash and hyperinflation, what does other notable investors such as Ray Dalio and Cathie Wood have to say? Ray Dalio, widely regarded as the best hedge fund manager of all time, earlier this week jumped onto a live stream to give his opinion on the mother of all bubbles. Here's what he had to say.
I was asked to talk about bubbles. Is the market in a bubble, stock market in a bubble, what's in a bubble? And I just wanted to give you some thoughts about that. A bunch of years ago, I started to think about, well, what is a bubble? What do I mean when I have a bubble? Because I watched a lot of bubbles over my something like 50 years of investing. And I basically thought there were 6 things that made a bubble in my mind, and I'm going to rattle them off, then I'll apply them so that you know what I think. First, how high are prices relative to the traditional measures?
So Ray Dalio goes on to rank the current conditions in the market today against these 6 criteria. Overall, this is the outcome he came up with for the market today. Although he hasn't ranked today's total market as a bubble, he called today's emerging tech definitely a bubble. Why is this alarming? Because the FANG stocks make up over 20% of the total S&P, and they also make up for the majority of growth we have seen in equities over the last 20 years. Overall, I would say Ray Dalio's view is in line with Michael Burry's. Now, another notable investor that chimed in on the bubble conversation was Cathie Wood of ARK Invest. Focusing on disruptive innovation, this is what she had to say.
But the other question, are we in a bubble? I do not believe so. And I am very happy that many people are worrying that we're in a bubble. I experienced the late 90s bubble, and the value investors out there were really worried, and they think they're going to have their day in the sun again because they did so well during the tech and telecom bust. I don't think that's the case now. I think that the seeds for what we're experiencing now were planted back then. Too much capital chased those opportunities too soon. After there were too few opportunities, and the technologies weren't right. The costs were way too high. We're at prime time for those 5 platforms now and those 14 technologies. And we've just begun. And they're going to be very disruptive and maybe destructive to a lot of value spaces. Not everyone, but anyone looking at price to book, watch out for that book. It may disappear because of disruptive innovation.
So Cathie Wood going against the consensus as per usual, saying she does not think we are in a bubble. What is going on? Who is right? Before we answer that question, let's first take a look at how Michael Burry is positioning his portfolio against a market crash as well as inflation. Revealed in his most recent 13F filing, Michael Burry put $241 million to work, positioning his firm against a wave of inflation in a series of various puts and calls on US Treasury bonds. Burry's largest position was $171 million worth in puts on the TLT 20+ year Treasury bond ETF. What Michael Burry is doing with this position is betting that the iShares 20+ year Treasury bond ETF is going to go down in price. This financial product is meant to give investors exposure to long-term US Treasury bonds, and when interest rates rise, bond prices fall. Essentially, Michael Burry is making a big bet that as inflation continues to get out of hand and so bad that the Federal Reserve is going to be forced to raise interest rates, in turn causing bond prices to fall. In a nutshell, Burry and his firm Scion Asset Management is betting that interest rates are going up. Looking at how inflated essentially every commodity price has gotten over the last 12 months due to COVID and stimulus spending, there is a pretty good probability that the Federal Reserve is going to have their hand forced and will be forced to raise interest rates to stop the wave of oncoming inflation. The remaining positions that Michael Burry has is in 4 different positions. They're various leveraged investment instruments that will go up in price if interest rates rise. The nature of these remaining 4 positions are highly risky as they are leveraged derivatives that just go to show that Burry has extremely high conviction that interest rates are going to have to rise soon as inflation eats away at the standard of living globally. So, who is right? Are we in a bubble? When is the mother of all crashes coming? Is it Michael Burry and Ray Dalio, or is it Cathie Wood betting on innovation? The honest truth is, no one knows. Although good arguments can be made for both sides, if you do think we are in a bubble, trying to time the markets is breaking a golden rule of investing. Don't try and time the markets. No one knows when or if the bubble is going to pop, so you could lose years worth of gains if you time it wrong. Additionally, if you decide to go all cash, your wealth will be devaluing at the rate of inflation every year. So, in my opinion, it's best to stick to your game plan, don't invest more than you can afford to lose, and continue to invest in companies and assets you believe in. Anyway guys, there's a breakdown of Michael Burry's crash hypothesis. I hope today's video provided you with some value. If you made it to the end, consider dropping a like on the video and let me know in the comments where you stand on the bubble or no bubble debate. I'll see you all in the next video, and as always, have a great day.